We're good. All right. Let's get it. So, let's get rid of any drawings we got, start fresh, and see what's going on with Bitter Coins here. All right. So, uh, you know, the trade that I took is called the 33 trade. All right. Where, in essence, you get 3 levels of rise. Anytime you get 3 levels of rise, this would be 1 level, 2 levels, and 3 levels, where you hit the high 3 times. Usually, you get a good drop, like in essence, like that is the trade. All right. I took the trade. I missed. My account wasn't filled up, but I did catch the retracement here on the 8 hour. All right. So let's just break things down, see what's going on. All right. So, over the weekend, we had this nice little channel over here. All right. Where it seems like they were trying to trap longs. All right. So if you come over to the 4 hour, all right, you can see the pins, at least, are to the upside. All right. I got lots of large pins to the upside. These are large pins to the upside, not as many pins to the downside. They're kind of flat. All right. So that kind of led me to believe that we would get the trade here. All right. So you got 3 hits to the high. All right. And now you've had your drop level 1. All right. So in essence, this is an M formation. Okay. So what we would expect is a nice M right here, because right here is where your level starts. You come up, you sit in it. All right. And then you get your M formation up in here. So right up like this, M formation. All right. Drop level 1, retrace. We'll probably get drop level 2. All right. There's your 200 EMA and your monthly support right here. Retrace, back up, test the daily open. All right. I don't think that you're going to come very much higher than that. All right. There is some green stopping volume up in here, right? And it would sit right at the bottom of that and then drop level 3. All right. Right around 22K. You got some shorts over here from this vector candle on the 4 hour. All right, this one I'm not really too concerned about, but this one I do believe they're going to want to realize a return on that. There's some blue volume in there where speed went down, and they'll start the business all over again. All right, this is a very high probability trade from the technique that I'm using. All right, it is about 8% from where it is now. From where I got in is about 10%. Okay. Currently we're doing okay. All right. I got the take profit set at $22,000. Right. I went 50x and I traded light. I think I put in $7. $7. And I took profits today. I did take profits because I got a little scared. But, yeah, my expected profit is like $61, which is pretty good. All right. And I'm risking 26. So, that is the trade I'm in at the moment. We'll see how it goes. All right. What else is good here? All right. So, let's go to the Dixie. All right. Dixie getting a nice move up. All right, it held my level 1 consolidation. Looks like we're in level 2. All right, 4 hour time frame. You're approaching your 800 EMA, where you probably would get a little bit of a rejection. All right, come back down, test your 4 hour 50 EMA, and then move up into level 3. We'll see how it goes. All right, so yeah, 8 hour looks really, really strong at the moment. Go to the daily. All right, the daily. You are at your 200 EMA on your daily, so that can be kind of an issue. Hopefully you can come up here. I don't know if you're going to get back above 105, all right, but we're going to go to the yields at the moment. All right, the yields are actually really interesting to me because they're at a really interesting level. All right, we know we love our zones. All right, so let's go actually to a weekly chart. All right. So just drawing zones out is good. Just draw boxes. That's it. Just draw boxes, even if you come over to your monthly time frame. All right. I did have some boxes drawn out here. It looks like you had 3 levels of drop back from the 80s. All right. On your yields, it looks like you got a nice W formation and you broke trend. All right. So come back over and go to your daily, and you can start drawing zones out on your daily and see after the break and see where these zones could be. All right. So this is definitely a zone. All right, there's a nice little box price. The thing with the levels is that they don't come back into them. All right, so that looks like it broke out. Okay, this is like level 1 on your daily. All right, and this would be like level 2. All right, price has not come back into this zone. It's gotten support on it, and now you're up into here. All right, so in essence, that's your zone on your daily time frame. All right, come over to your 12-hour, and you're gonna have more zones here, all right, where you have a nice M formation, all right, up here on the in here in this zone. But you know, one thing that's got me, you know, caught my eye on the yields is you got this zone up in here, all right. And the one thing about the zones is that you don't want to come back into them for it to be like a valid zone, all right. And then you got this zone up in here. Now currently you've come out of the zone and you're testing it. All right, where it looks like you want to come back into this zone. The yields make a higher high. You know, that's very, 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 very interesting to me at the moment. All right, so let's see what happens with the yields going forward. All right, if this comes back into the zone, I think it's all good. You know, the markets will move back up, and this will just be a little peak back up in here, and this zone will continue to chop around. All right, and then you don't have to worry about this little guy over here. However, if that does not happen, and this is the end of the zone here, where you've kind of broken out, and you're coming back up into this zone, and you're going to chop around in this zone up in here. All right, so just be mindful of that thing. It looks like it is moving up at the moment. Let's see. Yeah, it looks like you're kind of coming up a little bit. So get a little dip down into it. A little fake out underneath, a little deviation, and you're coming back up. All right, what's going on with Bitcoins? Yeah, Bitcoin's getting the move down. All right, so yeah, I do expect a bounce around 23K back up into here. All right, so maybe I'll take a little more profit off the table and then re-enter another short position on V2 or A2. All right, so you know, here's your M formation, V1, A1, right? V2, A2, and then finally ending the week down up in here where I expect price to consolidate over the weekend around 22,500 and 21,800. All right. Now what happens from there, I have no idea. All right. This could just cycle out again. All right. And this is going to be major resistance. I kind of do expect, I don't know. I don't know. All I know is that, you know, there is green volume up here on your 4-hour time frame. All right. So just be mindful of that. That even on your 8-hour time frame, if you come on over to Binance, all right, they have built some longs. Is this the right chart? This is not the right chart. I want iHeart Crypto. Come on over here. Yeah, much better. All right, so going over to Binance, coming to the 8-hour. Take off the Heikens. Heikens ease my anxiety, man. They ease my anxiety. Let's get rid of anything here. All right. So, you know, you did build a little bit of longs here on the 8-hour time frame. All right, so really, what I'm looking at is trading into vectors on the 8-hour and looking for peak formations on like the lower time frames, and then trading into the vectors down here. So what I do expect is, for it to come down into here, all right, and then kind of pop back up. But we'll see what happens because, at any given time, the trend can change, all right? You do have daily vectors up into here, all right? So we don't know, you got your 200 EMA. In essence, you could come up here to 27,000, around there, about 28K. All right, that's total possibility. All right, total possibility. All right, right now though, your momentum on your daily on Market Cipher is pointed down. You could, what I kind of do expect is maybe you come down in here, print a little trigger wave that'll send you up to this final level here. Because if you come over to the 3-day time frame, if you're counting levels on the 3-day, this looks like level 1. All right, this is just a large level 1 drop. Right, this would be level 2. Where in level 2, you kind of get like a little W. I'll draw that out real quick, and this would be level 3 up into here on your 3-day time frame, right? Kind of form your M around there, and then you get like something like, drop level 1, drop level 2, drop level 3, back up into here. All right, that's kind of like what I'm expecting. All right. On a 3-day time frame, okay, because you could come up into here in your 3-day, right here your 13 EMA is sitting at 22.5, so maybe you get a little wick down below it, and then you can pop support onto there, finally coming up into here. When that starts to bend, when the 3-day 5 and 13 EMA do start to bend, all right, that is when I expect a major trend reversal on the 3-day time frame. All right, so let me just thicken up my EMAs because my ketchup and my mustard need to be a little bit more for me. All right, cool. Save that, mother trucker. All right, so, you got a 3-day vector candle over here. I'm expecting them to take that at least, Right now, you've taken a good portion of it, so you could get a bounce. You're at your 5 EMA, right? But, if this is level 1, you got support here on your 13 EMA. All right, so I do still expect 22.5 coming out of the level, all right, at some point. Looks like you're getting a nice move down. All right, so let's see what's going on with the Dow. Oh, look at the Dixie, man. Dixie getting a mad move up, man. There, you got your 50 EMA on your 3-day time frame sitting right here. All right, watch this carefully. You could come all the way up to 105.37. You can even come a little bit higher. All right, so just be cautious. All right, come over to Bean Ants. All right, so in the larger picture of things, all right, all you've done is come and tested your 50 EMA on your monthly time frame. Okay, so I've gone over this now. On the monthly time frame, at least before they've moved it down, they've claimed the vector on the monthly and then a little bit, all right, on the monthly time frame. All right, so you got all this move up in here, and then they went up a little bit more, about 15% on the monthly time frame. You come up into here, what's another 15% or so, or 10%? That's 35K. All right, although there's no rule that says they have to do that. All right, and in essence, like your EMAs are, the railroad tracks are coming down, right? These are the railroad tracks. All right, but you got a little bend in the track, but you're under your watermark. All right. There's no rule that says they have to claim these regions, because if you do look, right, you might say, all right, they want to claim these longs on the monthly time frame. All right, these are longs that they built. They also have these longs down here at 3K or 4K. All right, and they also have shorts that they need to be claimed from back in this region. Although we're not gonna go into all that. That's I know that the general consensus is not that. All right, but if this is level 2 drop, all right, level 2 drop, you know, you're playing within your stopping volume here, all right? On Binance, you don't really have that, but this is stopping volume, all right? Right here. This is stopping volume. All right? So you're kind of playing in this zone, all right? So you do have some bullish divergence here, all right, on your weekly time frame. Come on over to here. That 13 EMA on your monthly is going to act as major resistance. Obviously, it has already. So we'll see how that goes. But momentum on the lower time frames is to the upside. All right. It's just that 50 EMA is causing you a major issue. All right. So, like I said before, you know, you might on the monthly 21.8, right, is your 5 EMA. And then also on your monthly, let's look for, you got higher highs in your RSI. I know Savvy was talking about this, so credit to him. All right, I'm not going to take credit for anything like that. But, you know, he loves looking for the hidden bearish div. Although, you know, this could come higher and still make hidden bearish divergence, I think. We'll take a look at that. All right, so, and see on your monthly, right here, that low, let's mark it out. Let's mark these peaks off real quick. Let's look for it. All right, so you got like a little peak here, all right, and you got a little notch there, and then of course you got these bad boys up in here. All right, so let's just take a look at these peaks. All right, so, you know, in essence, you want to be, I think this is the main one to look at because this is the vector. All right, so let's take it from there. Right there, okay. Bam. All right, so right there, you got your hidden bearish divergence. All right. Fair enough. Okay. Now, from here, you've made no divergence at the moment. All right. It's still okay. This is still totally couth. Totally couth. All right. So, but right from this candle here, set in June, the big drop, you do still have hidden bearish divergence. This has to come up and break $32,000 for that to get invalidated. Pretty sure. All right. So let's just be mindful of what's going on. All right. In essence, you know, the weekly is kind of like what I'm looking at the most because, you know, the trade that I took is a fish hook on your RSI. All right, fish hook, RSI, pins to the Mayo, you get a drop. I mean, that is in essence this. And if you look, you do have kind of like an M formation forming here on your weekly time frame. All right, so another thing to look at. All right, now on the weekly time frame, at least to go to Binance where all the nonsense goes down. All right, they do have some longs at 33. They got some longs up at 25 on the weekly. All right, they have this vector candle region up here where they might want to realize a little bit of a return on their longs. All right, but if you go to your 6-month time frame, all right, they did a lot of longing in the past 6 months. All right, a lot. All right, then you come over to a regular exchange chart. The other exchanges, you know, 28K is where they went short from. You know, 28K is where they all kind of went short from in the last bull market. All right, where they sold the most longs, right? But they had to take the most shorts. So, you know, they're net short on the 6-month time frame from about 27.5. So, all right, you know, you got to realize that. So I think 27.5, 27.8 is a really good place to come up to if you look at your weekly time frame. All right, the last time you kind of made a flag out, right, in this drop level 1, right, you came back up into this region here where you had a large drop and a retrace. All right, this zone right here is indicative to this zone right here, for me at least. All right, where you came down for your drop. Here's your M formation up here. All right, drop level 1, retrace back into this zone right here. All right, drop level 2, where it's a lot of manipulation. All right, you might come up for a retrace back into here. All right, and that would line up with about 28K. All right, and then you got a little bit more up in here, right? 33K. You do have this little zone here. All right, but I don't know. Maybe that's just insurance. All right, and then you can get another drop down. All right, because on the weekly time frame, you do have shorts sitting down here at 14K, 5K, but the last place they went long from on all the exchanges, okay, was right up in here, so 4K. All right, with a large blowout up in here where speed happened. All right, so this would be kind of like the target, 3K. All right, where speed was where speed happened, in essence. All right, we'll see what happens. I mean, that's really like the simplified version of what's going down. All right. I don't know. Anything could happen. You could easily print a green dot here, and then head up higher. I mean, this could be a very large retrace. All right, like in the pattern of things, I don't think that you're coming up into here. I don't think that you're gonna go to $52,000. All right, I don't. Not with the way things look, but in essence, this is a macro M, right? You make a higher low, right? But you get the retrace. Now you've made a lower low, right? You kind of might think that. So you gotta think. You're like, okay, now we have higher lows. They want you to think that you're coming up into these regions, all right, where you can get a nice retrace up into here, 36K. That would be feasible, all right. 35, 34, right? Just to fill those longs, all right. But they don't need to come back into these regions, all right. You could easily just come up into here, and that could be it, all right. That could be the trend, right? Where you don't come back into the zones, because we talk about the zones all the time. That once they're done with the zone and on your monthly time frame, all right, what this tells me, when your 5 and your 13 cross, all right, they're done with this zone right here. Okay, we are done with this level on a monthly time frame. All right, we are done. Let's go to another level. All right, that's like the stopping volume. All right, now that being said, you have a level here, right, where you're kind of done in the zone. You got some wicks here, right? This is another level up into here. And that level can go all the way to 36K. It could go to 35K. It could go anywhere into there. All right, so you'll see where the momentum takes you. However, this is a crazy move, and like I said, you're getting rejection off your 50 EMA. All right. Now, needless to say, that if that was the end of this range, right? This range where these wicks went down, right? If you include the wicks and all that stuff, you can pull that down to here, and then pull this down to here, right? And then you're at 28K. And it makes a little bit more sense to me, where these are the range lows of your M, when you can come back and kind of back test these lows over here around 28K, 29K, all right, and that would be it. But in essence, I'm frozen. I'm frozen. Let's go back over here, and we're back. All right, cool. Looks like you got a nice little bounce. Check it out in a second. All right. So you don't know where these zones play off of each other. Maybe they overlap slightly. Come back up, confuse the hell out of everyone. 35K. That would be a dope rally. All right. You do get a good rally over here, but this is I don't know. I don't like it. All right. I don't like it at all. All right. You didn't touch your 800 EMA on your daily. All right. Normally, you get back above your 50. You get back above your 200. The next target is the 800 EMA on the daily. All right. And like I said, on the 3-day time frame, you're back above your 800. You're back above your 50. All right. You got your ketchup and your mustard coming up. Right. In essence, that's a pretty good uptrend. All right. You got a beautiful W formation down here. All right. You never came back and tested the top. All right. So that's concerning. But you got rise level 1, rise level 2, come back down, rise level. See, that's rise level 3. I think would end up in here on your 3-day. Okay. Because I don't know. They like to leave. They like to leave something for later. I don't know why. You know, they don't need to come back to these zones. All right, there's a massive imbalance, and if you're a trader, you're looking up here. All right, you're looking up here. You want that. You think that they're gonna fill that. I don't think they're gonna fill that. I think they're just gonna come back up into this consolidation region, like very much like they did here. All right, because that was the end of this zone. And if you're looking on your 3-day time frame, you got, you know, this wick right here from where you pumped and where you kind of made your Wyckoff pattern or whatever. All right, that 29K region is a big region. All right, maybe you pump up a little bit more, maybe, you know, and that is the retrace. All right, in essence, over here, when you made this drop, all right, you got your 382 retrace. All right, now over here, your 382 would be around 35K. All right, if you want to go from the top to the bottom. All right, if you're going from that, all right, from your 382 retrace. If you go from the local, your local retrace, something like in there, your 382 retrace is still at 27,000, 28,000. All right, for your 382. All right, now your golden pocket does sit up there. Everyone loves the golden pocket, but why? The thing about that, from this high to this low, okay, if you're doing it like that, you didn't get your golden pocket over here, okay? Everyone expects the golden pocket retrace, right? 56. Everyone expected that. You didn't get it. You got the 382, okay? So, you know, looking at it from that perspective, from, you know, swing high to swing low, you know, 27,000. Maybe you do come up to your 0.5 on your second retrace here. All right, and book a little bit more. All right, because we do know that there are longs sitting in this region. All right, but you don't need to take all of the green, because now what you've created, you do have a lot of red down here, right? And the problem is that, you know, here you got to think of it from a certain kind of perspective, okay? When this flag broke, they sold a bunch of shorts. Okay, they sold a bunch of shorts and they had to take the long position. All right, now if the shorts paid themselves, and maybe they have already, because they don't want to, you know, lose any more money. If they paid themselves, there's no reason to come up into here. All right, now they take this break from this flag here. These people might be holding on hope that they're not going to come up into here, right? And they put their stop loss just below, you know, just at these lows. So all they got to do is come up into about the 30K region, right? Put your stop loss at 30K or whatever. But, you know, a good trader would have moved his stops into the consolidation zone, right? Where they would have moved their stops, you know, just above. They come down, right? You come up, and then you come down. They would have moved their stop just above previous high, right? Just above previous high, right? Where they've come down. And now they've stopped everyone out, because on your 3-day time frame, I believe, right, your high is 25,192, 25,250. I think you made a new high, 25,250. This one was 25,211, right? So if they put their stop just above this previous high, they've now been stopped out, all right? And the business would be done. The business would be done. Of course, you can also get another spike up. Some people might have moved up the stop, right? If they did move their stop up, right, they would have moved their stop up probably just, you know, around these wicks here, 26, 27. Let's go to the high block, see what's going on, and then I'm going to cut this one short at 30 minutes. High block, high block. My hair is messy. I woke up late. I was up all night for Asia. I got my entry, and then I set my stop loss, and I said, I'm not watching this crap. I'm, you know, whatever. I used like no money. All right, so on the high block on your 12-hour time frame, all right, it looks like they built a nice pool of liquidity up here. All right, and that pool, there's not much on your 12-hour above 25,300. All right, there is not much up there. All right, so you look where price is going. It kind of looks like it wants to come down into here. All right, at the moment. But again, 24,750 is a big region. All right, you do have a lot up in here right below 25k. All right, you do have this big pool up in here. All right, but you also now have a big pool up in here. And momentum is currently to the downside. All right, let's go to the monthly. Let's see what we got going on. Let's see what they're building. All right, on your monthly time frame, see, they built a massive pool here, right? You got 10 billion, 12 billion, 15 billion, 12 billion, right? Up in here, you got 14 bill, 11 bill, another 11 bill, 13 bill, right? But, I don't know. This all came in now. See, these people have been holding, right? So I kind of look at where it kind of started, right? So they came down, they took this liquidity, they built a new pool of liquidity, okay? I wish you could go back in time, because really, if you think about it, like up in here, they built a bunch of long liquidity here, all right? They were building the long liquidity by spiking price up and people FOMOing in, right? And then they ripped it to the downside, all right? Here, they've kind of done the same thing where they built a large pool of liquidity up into here, right? But they've also built more shorts up into here. It's a little bit tough. But if you let's come to a crazy chart. Let's go to the 1-year chart and just see what's going on in the 1-year chart. All right. Yes, look at this gold region here. Look, 208 billion down there at 15k. Right? So, this move up has built a ton of liquidity down in here. All right? But if you coming up here, you got these different shades. See, like, it looks like people are like going mad long on a lot of leverage, and this pool is just getting like massive down here. It's just like massive. People think that it's going to the moon. Where like the shorts are a little bit more like reserved, if you will. Like 35k is the biggest pool up in here, right? There's still that huge pool built from over here, right? 37. Let's see what it is now. About 100 billion. So you got 100 billion here at 35k, about 84 billion. All right, but down here you got 200. Now granted, if you add all this up, but you got to think about it. Like it costs money to move the market up like that. You got to create some kind of narrative. So, collectively though, the shorts that are seem to be like staggered. There's 150, 250, 300, 400. You got some liquidity up in here right below 30k. It wouldn't surprise me if they come down and then come back up for this before they come down. All right, that would not surprise me. But the level count is what concerns me. If this is level 1 and this is level 2, right? We'll see. Level 1. W formation into level 2. We'll see. All right. However, right around 29,200, there's almost nothing, right? For them to move it up past this level here, it would cost a lot of money for them to keep going, because there's going to be a lot of profit taking at 30k. A lot of profit taking at 30k. And I don't know if it's advantageous for them to move it up like that. So, we'll see. We'll see what happens. I don't know. We're just trading level day by day. Little scalps, take profits, go again, went short on BNB. All right, it's more of a swing trade. All right, I think my liquidation is $450. It's up in the red, up in here. Up in here where they built shorts from. All right, so we'll see. I might depending on what price does here. All right, because if this is level 1 drop, you know, I don't know, this wick, it's a very high wick. Okay, the average monthly range is that. So I don't know. Anything can happen in this game, man. Anything can happen. But on BNB, there isn't a ton of longs. There's all of this, man. All these shorts. All right, and BNB is sketchy at the moment and all that jazz. Drop level 1 retrace, drop level 2. It looks like you got the retrace, right? You didn't come back up into this zone. They sold it off. All right, this zone looks like it is done for, right? And you're kind of at the top. All right. See what I mean about the zones? Like these wicks, I mean, this is an altcoin, but like, you know, see how it gets sold off? Like that's what you would expect for a Bitcoin, right? So if BNB is any indicator of Bitcoin, all right, you would expect another sell-off, all right? I don't think BNB comes above 450 and makes a new high on this time frame, although anything can happen. Okay. Yeah, we'll see how it goes. Anyway, I'm out. Take it easy, everyone. See you next one.